What a week it's been, Frank. Let me kick off with Amazon because they beat on revenue, they beat on earnings. AWS showed growth of about 16%, resilient in what is a very difficult market at the moment on the macro side and for cloud computing as well. Its ads business showed some strong growth as well, even with those macro concerns. But the issue was with the guidance. That's why you're seeing that move lower. The company guiding around 127 billion to 133 billion in revenue for Q2, just 5 to 10% growth. But the CFO warning that companies are cutting their spending on cloud, and that could be bad news for Amazon. It's saying that the April growth rates are already lower than Q1. So that is what sent its shares lower, that outlook, that guidance. Moving on to Snap. It was really bad news all around for the company. It missed on user growth, it missed on revenue growth, it missed on average revenue per user, and its second quarter internal guidance, as it said, was revenue of about $1.04 billion, which was below what the market expected. And secondly, Pinterest, it was good because it beat revenue, but again, that guidance was what brought these shares substantially lower as well. It's predicting about 4% revenue growth for the second quarter, again below market expectations. The issue for both of these companies is this: the ad market remains very tough right now, with business cutting back on ad spend as well. Now, Alphabet and Meta, given their scale, their size, their user base, they have remained resilient and managed to eke out a little bit of growth, even in this tough macro environment. These smaller players, Snap and Pinterest, are struggling at this point, and it doesn't look like they're bullish on the current quarter either, Frank.
Sergeant, we heard from so many names this week. Give us the scorecard when it comes to tech.
Well, let me start with what I think were the top performers this week, and that was Microsoft and Meta. Microsoft showing its cloud business remaining strong but slowing, but it's showing resiliency, as I mentioned, in what is a tough quarter. Meta, meanwhile, showed its core advertising business back on track, even as its mixed reality metaverse division continues to pile up the losses. Investors happy with the fact that its bread and butter, its core ads on Facebook and Instagram, continue to come back. Where I'll put in the middle is Alphabet, I think, because it was a mixed bag. Yes, it showed a bit of resiliency on ads, but its guidance again said that there could be some uncertainty going forward. That's middle of the pack. Again, perhaps joining Alphabet, perhaps a bit lower really, was Amazon. As I mentioned just moments ago, it showed it continued to grow in cloud, but that outlook was uncertain. It said that companies are cutting back on cloud spend, which could have an impact. And at the bottom of the pile, certainly the worst performers this earnings season, Snap here struggling with what is a difficult ad market at the moment, and Pinterest as well with similar expectations. One thing I will say for this whole week is this: that expectations were low from the analysts, from investors going into these companies just had to meet or beat earnings. But I said at the start of the week that the key was going to be the guidance. And all of these companies, even the ones who performed really well, warned on some sort of uncertainty, some sort of belt tightening from businesses and spending on cloud and advertising going forward. So while there has been a rally in some of these names, I think investors are probably a little bit cautious at this point, given some of the outlook we've heard from these companies going forward, that the tech sector is not yet out of the woods, Frank.